Hello everyone, and welcome back to the channel. We've got a packed agenda today, so let's dive right in. We're breaking down the latest moves in the crypto market, what's driving the action with meme coins, and the big regulatory and exchange news that's shaping the entire landscape. Let's kick things off with the big picture. After a brief pullback, the market is showing fresh strength. Bitcoin has been climbing and is now trading comfortably in the $113,000 to $114,000 range. Ethereum has also reclaimed the crucial $4,100 level. This upward trend is lifting the entire crypto market cap as investor appetite seems to be making a strong comeback. So, what's behind this sudden pop? It looks like a combination of positive fund flows and encouraging headlines. On the flow side, we've seen some massive stablecoin movements. One particularly interesting transaction was a whale moving roughly $200 million in USDT over to Binance. Now, traders often see these large stablecoin deposits onto exchanges as a sign of serious buying power getting ready to be deployed. It doesn't always mean a rally is guaranteed, but it certainly suggests that big players are preparing to make moves, adding some short-term upward pressure. But it's not just about the money moving around. The structural and policy side of crypto is also seeing some fascinating developments. The U.S. Securities and Exchange Commission, the SEC, recently issued a rare no-action letter to a crypto firm called 00. This is a big deal. The industry is interpreting this as a potential shift in the SEC's approach, possibly moving towards clearer and more constructive engagement with startups. For new token projects, this kind of development could lower the overwhelming uncertainty that has plagued the space, encouraging teams to open a dialogue with regulators early on. This is a step, albeit a small one, towards regulatory clarity. And speaking of clarity, let's talk about ETFs. The landscape for crypto-related exchange-traded funds is evolving rapidly. Recent reports suggest that regulators are working to streamline the approval process for commodity-based trusts and crypto ETFs. Many industry insiders are now saying that a wave of spot crypto ETF approvals is no longer a question of if, but when. This has been a major storyline for months, and any news that suggests an easier or faster path for these products tends to get institutional investors very excited. Easier access means more potential for big money to flow into the market, and that's a powerful narrative. Now, let's zoom in on one of the most talked about corners of the market. Meme coins. Where there's speculation in crypto, meme coins are never far behind. The established leaders, like Dogecoin and Shiba Inu, continue to command significant market cap and social media attention. But we're also seeing a constant stream of newcomers like PEPE and BONK making absolutely massive short-term moves. It's crucial to understand what drives these assets. Meme coins are fueled almost entirely by social media momentum, new exchange listings, and the occasional shout-out from a celebrity or major influencer. Because of this, their volatility is off the charts. Gains can be astronomical, but they can flip into major losses just as quickly. So, a word of caution. If you're venturing into this space, remember that it's a high-risk, high-volatility game. A few signals to watch in the meme coin space right now. Trading volumes for the top tokens have ticked up along with the broader market. Analysts are also keeping a close eye on liquidity events and new listings. When a popular meme coin gets listed on a major new exchange or a large wallet makes a significant move, it can light a fire under the price. For example, PEPE and BONK are still holding their positions as top meme tokens by market cap, and they remain a focal point for traders who are hunting for that quick, short-term momentum. Shifting gears to the exchanges themselves, Binance just made a major announcement. They've launched a new crypto-as-a-service, or COS offering. This service is designed to help traditional financial institutions, like brokerages, easily provide crypto trading services to their own clients. This is a strategic move to tap into the institutional market and capture what's known as white label demand. If this gains traction, it could seriously accelerate crypto adoption among legacy financial players. For anyone wondering how crypto will build more bridges to traditional finance, this is a development you'll want to watch closely. So, when you put it all together, the potential for clearer regulation, new products from major exchanges, and large on-chain fund flows, you get the current market sentiment, cautious optimism. The market is sensitive. It can rally on small pieces of good news, but can also pull back quickly if a negative headline hits. What should you be paying attention to over the next few days? First, keep an eye on those stablecoin flows. Large amounts of USDT or USDC moving onto exchanges can signal buying pressure. Second, watch for any new notices from the SEC or court rulings related to ETFs or token classifications. Even small statements can have a huge market impact. And third, specifically for meme coins, monitor social media trends and new exchange listing announcements. These are often the catalysts for those explosive, but often short-lived price moves. Here's a quick risk checklist to keep in mind. First, always use position sizing you're comfortable with. Don't invest more than you can afford to lose. Second, resist the fear of missing out, or FOMO. Chasing a coin after it has already spiked is a recipe for disaster. Third, for short-term trades, consider using stop losses to protect your capital. And for those with a longer-term horizon, it's wise to separate your speculative meme coin bets from your core crypto holdings. Don't let the daily noise dictate your long-term strategy unless there's a fundamental change in the project. Now, for those of you who create content or trade meme coins, a couple of practical takeaways. If you're a content creator, fact-check everything relentlessly. The meme coin space is driven by rumors and social media posts. A single false tweet can create a chaotic wave of buying and selling. Use on-chain data explorers and official exchange announcements as your primary sources of truth. If you're a trader, set up alerts for major exchange listings and large wallet movements. These events can create incredible opportunities, but they can also be traps where liquidity suddenly disappears. Before we wrap up, here are a few key things to watch that could change the market dynamic this week. First, any new guidance or decisions from the SEC on ETF filings. Second, any more large-scale stablecoin inflows to major exchanges. And third, any further institutional partnership announcements, like Binance's cores that connect traditional finance with crypto. So, to summarize today's roundup, the market is cautiously climbing, with Bitcoin back above $113,000 and Ethereum over $4,100. Meme coins continue to be a high-risk, high-reward sector driven by social hype and new listings. And finally, the underlying sentiment is being shaped by promising regulatory progress and innovative new products from exchanges. If you're trading, manage your risk carefully. If you're creating content, prioritize accuracy. The market's mood can change in an instant, so stay sharp out there. Thanks so much for watching today's breakdown. If you found this helpful, please hit that like button, and don't forget to subscribe and turn on notifications so you don't miss our next update. See you in the next video.